Range trading strategies. That's exactly what we're going to go over in this video. My name is D. Anthony. I'm a full-time options trader as well as futures trader. Predominantly, I'm going to be trading the NASDAQ 100, the NQ or the MNQ micros. Again, with the stocks that I like to trade, it's going to be stocks like Apple. It's going to be stocks like Tesla, Nvidia, AMD, Microsoft, Meta. I'm going to trade some of the big names in the space. So we're going to get right into how we can kind of navigate when the market starts to go into a little bit of a range, when the market gets ready to either set up for another leg higher or another leg lower. If you've been watching and you've been trading the market the past week, price action has not been the best. I've been looking around on social media. A ton of traders have been having problems and struggles with either over trading or being on the wrong side of the move, because a lot of times when we are in a range, it is very difficult to kind of identify where we potentially could go, where potentially we could stop, because just due to the fact that, you know, a stock is going to come from the bottom of demand, it's going to go up to supply, it could stop in the middle, it could retrace, it could then rebounce. So it makes it a little bit more tougher. A lot of trading strategies and a lot of newer traders, predominantly the smaller retail traders, you know, they're looking for those big breakouts. They're looking for, you know, a stock to take out a high and continue to run, or they're looking for a stock to take out a bottom level of demand and kind of put in a new leg down. When that doesn't happen, you tend to overtrade. You tend to get on both sides of the trade. You're going long, you're getting stopped out, you're turning around going short, you're getting bounced. It makes it very, very difficult. If you've had those problems, then this video is definitely going to be for you. If you guys want to get access to my trading room and community, make sure to see all the links down in the description box below. But what we can see here on the chart, what we're looking at is the NASDAQ futures. That's going to be /NQ. I'm only using this for this video to kind of just give us an overall kind of big picture idea on what the NASDAQ is doing. So if we look at this chart, I'm going back all the way to last Thursday, Friday, Monday, Tuesday, and now today is Wednesday. It is currently 9 a.m. Pacific Standard Time on the 19th. If you can kind of look at what's going on here, I have a simple moving average just running here in the middle. That's a 20-period moving average. I also got a demand zone down here at the bottom. You can see multiple touch points. You can see touch points here, here, as well as here. This would be considered, or what's called, a triple bottom. This would have been a double bottom. This was a first retest of the breakout. But if you kind of, you know, look at the overall picture, one thing that I want you guys to kind of identify, until price action breaks below this demand zone and starts to close below it, we have to respect this as a range. Okay, so when we're respecting this as a range, this is going to be a zone. Okay, so a zone, this zone here has to be respected until it is validated that it is no longer being respected. And what that means is, as we start to approach this zone, okay, as we start to approach this zone, we need to be buyers. Okay, we have to be buyers. Even though in real time, on maybe a smaller time frame, we're looking at the 1 hour time frame. If you're looking at the 1 minute or the 5 minute or the 15 minute, even the 30 minute, it may look like these positions are shorts, okay, at the given time. But until they get validated, right, until they get validated and we actually break below this demand zone, we have to assume and give the bulls the benefit of the doubt. The same thing that we have to do to the upper supply zone, right? The upper area of the range. What we have to do is start to build short positions as we approach, okay, this top zone. When we get into this top zone, we have to assume that the bears are going to take control and push the price action back down to the middle or the bottom of the range. If that does not happen and we do manage to break out, okay, for example, if price action continues to do this and we break out of this supply zone, of this upper range, what we would then be looking for is a pullback either to the top of the range or the middle of this zone. Look for it to hold and then bounce up higher. As soon as we start to bounce up higher and take out the new high, this is where we're going to want to get long. Now, respect the range and respect the zones until you get that confirmation, right? When we are trading in the middle of the range, okay, when we are trading in the middle of the range, it's very difficult to kind of set your feet. And this is where a lot of traders have been getting stopped out. A lot of traders are looking at the big breakout, the consolidation. They're looking at this level here. And when we break out, they're then going long, but you are going long into a level of supply, which is a heavy level of resistance. Again, until we show that we can get over this level and then back test, hold, and then push higher, we have to imagine and assume that the price action is going to come back down either to the middle of the range or the bottom of the range. Okay, so just kind of looking at the overall picture from a 1 hour time frame, how do you exactly play this, right? You can definitely use the 1 hour time frames. However, if you are playing minis, which is the /NQ, or you're playing micros, depending on your position sizing, you don't really want to use the 1 hour time frame because this is a lot of risk, right? If we look at the bottom of this demand zone sitting at around 13,055, all the way up to the top of this demand zone is around 13,100, which is around 50 points worth of risk. Now, if you're playing a few contracts of the minis, that can, you know, depending on if you're trading a personal account or a prop firm account, that can definitely stop you out. It can definitely shake you out. But you can see the overall context on this picture needs to be, you know, kind of understood that, hey, when we do get down into this 50-point range, we have been bouncing. So we need to start building our position and or taking those scalp positions to kind of play back into the middle of the range and then play into that next area of the range, which is this upper supply zone, which is this red box here. And as we approach this area, we need to be selling and taking profits. So for example, if you kind of look at where this day started off, when the futures when the overall pre-market session kind of opened up at 2 a.m. here, you can see the futures put in a nice bottom here, kind of retesting this last double bottom that we had. We consolidated sideways, and you can see at 6 a.m., which is when the first hour candle is going to open up for the actual stock market, we did get a nice aggressive bounce, got rejected at the 20 period moving average, started to sell off. Now, if we would have lost this low here and then taken out this low from Friday and closed below it, it would be a full-on short position on the NASDAQ 100 as well as the stocks related to the NASDAQ. Now, that doesn't mean that some stocks in the NASDAQ are not going to be red or they're going to be flat today, but the overall market direction has shown there is buyers and there is liquidity down here where these buyers are going to step in and kind of move this price action up. You can see going into the 7 o'clock a.m. candle, which is a 10 a.m. candle Eastern time, we then got our push into that 20 period moving average, got our confirmation over, and this is where essentially you would have wanted to be long when we got that first change in trend. You can see that once we lost that 20 period moving average yesterday at around 7 a.m. Pacific Standard Time, we've never reclaimed it until this morning, almost about 24 hours later. So now that we have reclaimed this area, the momentum has now shifted to being long and bull biased, even though we are still stuck in a range. We want to be playing this range all the way up into the 13.2s, all the way up to 13.297, which is 13.3. So we've got a 100-point range here that we're looking to kind of take advantage of, start taking some profits into this zone. And as we get into this zone, we kind of want to just patiently sit on our hands. Once we get into this supply zone and into the top of the range, it's not a time where you want to be a buyer, because as the chart has shown us over the past 5 days, as soon as we start to get into this range, we find heavy resistance and start to fall back down to the middle of the range. So the last thing you want to do, and one thing that a lot of newer traders do, is they start to go long here when you're already late to the party. When you should have been buying was down here. When you should have been buying was this break here. You should have been buying this break here. You should be taking profits into this zone versus trying to get long and playing for the potential upside in this zone. Now, that doesn't mean that we won't have an opportunity to kind of get long, but what we're going to actually need to see is to get into this supply zone and either come back down, start to back test and hold without falling back down to the middle of the range. And as soon as we start to push higher, you can take a scalp position here. But again, you want to make sure that you're selling and locking in profits at that prior high, which is right here. So when do we fully get kind of risk on? When do we think that maybe the trend is starting to trend in the bull direction? What we would need to see is a hold in this zone, and we're going to need to break out over this previous high, and we're going to need to put in a new high. As soon as we put in that new high, this is not when you want to go long, because this is where bears start to trap newer traders. This is where, you know, big banks and good hedge funds and excellent retail traders start to take the money of lesser experienced retail traders. because it's right here where everyone starts to get very, very happy. They get long, and then you have a drastic pullback back into the prior supply zone here, and then you get stopped out for a loss. Lo and behold, you look back 2 days later and all we did was hold and then put in a new high. So how you want to play this if you're not going to scalp it? If you're going to play this as a scalp, you want to get into this range, you want to consolidate, you want to hold this range, you want to make sure we don't pull back into the middle of the range, and then when we push higher, take a scalp, but make sure you're also taking profits here. Now, if we're looking for a longer term position, maybe a day, 2 days, we're looking for a possible trend. What we want to see is get into this zone, chop around, put in a new high over this previous high, come back into our previous supply zone, see if this is going to turn into a new area of demand. And as soon as we do bounce out of this area and take out the new high over our previous high, now this is where you want to get long here. Okay. And then you want to be selling for profits as we start to make those new highs. This is a very basic overview on how you can use supply and demand to kind of, gauge where you should be trading. This is kind of gauging where you should be putting your stops and your take profits. This is how you trade a range. So again, just to kind of be clear, when we come down into demand, we want to be buyers. Okay. When we come up into our supply, we want to be taking profits, and we want to be sellers. Okay, we want to be sellers in this zone. Okay, now until we break down or we break up, you have to respect the levels and you have to respect the range. As hard as it is, a lot of traders want to see us get into these zones. They want to see us break down. You want to see us come down into this zone, and you're getting short here and you're looking for this move here that never comes. In fact, what does come is you get here, you get a little taste of it, and then boom, it stops you out. Okay, you want to be going long here, you get in here thinking that we're going to shoot up here to the moon, and then we come back to the middle of the zone. So this is what needs to be kind of understood. Right now is not the time where you want to be putting on full size. It's not the time where you want to risk your whole portfolio. It's not the time where you're going to get these big lavish breakouts. Right, again, your best areas to kind of catch the bigger moves is getting them down here at the bottom middle of this demand zone. If you can start to load up position and hold through that initial 1 to 2 hours of choppiness action, a little bit of drawdown, as long as we don't get a close underneath this demand zone, and you can kind of sit through that pain tolerance, these are your first initial big moves. Look at the moves that come when we do come out of the bottom of the range. For example, if we kind of look at the first time we came into this range here, if you would have started accumulating anywhere in this zone here, and I'll just put it in the middle, let's say 13.89, 13.089, we put in a 1, 2, 3, 4 hour push higher all the way up to 13.200. That's an over 100-point move. If you would have got in here at 13.090, you would have got all the way up to 13.188, which is a 100-point move. If you would have loaded up today in this demand zone, let's say even at the top of the range, when we start to clear out of this demand zone, that price would have been 13.100. You would have got essentially an 80-point move. That's how you play these ranges. You don't want to be a seller down here. You don't want to be a buyer up here. What you want to do is be a patient trader and wait for the price action to come down into these zones or come up into these zones. And then when we do get into those zones, you want to play them accordingly. And again, make sure you trust technical analysis and give the bulls, give the bears both their glory. You give them both the benefit of the doubt. We never assume that we're going to break down. We never assume or think that we're going to break out. We have to play the respected zones until it shows us that we get a confirmation through the range. I hope this video helps you guys. If you guys want to trade with me and the team each and every single day live, and you want to get access to my 2 courses where I'm showing you guys my exact trading strategy, how I'm picking stocks, what stocks I'm playing, my mindset, and a psychology kind of mentorship and coaching, make sure to join Evolution Traders. It's a one-time fee. It's a lifetime fee. You get access to the community forever. You get access to the workshops forever. You get access to all the training forever. You get access to my watch list forever. I will see you guys all on the inside. Again, make sure to like, comment, and subscribe, and I'll catch you guys all next time.